So, now I hope you understood the basic understanding, you have the basic understanding of the variance analysis and standard cost, right. Now, we are getting into the calculation part, calculation of the first element, that is the material cost. So, material cost variance. So, material cost variance is difference between the standard material cost and actual material cost. I will calculate the standard material cost and the actual material cost. So, what would be my standard material cost? Standard quantity into standard price. What is standard quantity? Standard quantity is for producing one unit, how many units of material, standard material units you need. Fine. So, that is the standard quantity for actual output. Say, I am giving you one example. Suppose for producing this pen, right, for producing this pen, say 50 gram of polythene, plastic is required. That is your standard, right. So, actually it may be more or less than 50 gram, right. The actual quantity may be different for producing this pen, okay. Sorry. But what is my standard price now? While I am calculating, while I am preparing the standard, I said that for manufacturing one unit of this pen, I need 50 gram of polythene granule, plastic granule at the rate of say 100 rupees per 100 gram, say assumption, right. So, this 100 rupees per 100 gram, this is my standard price, right, and my standard quantity is the 50 gram per unit. So, my standard material cost will be how much? The standard quantity 50 gram into standard price 100 rupees. So, I am getting my standard material cost, fine. Now, when I start, that is my standard, I estimated. Now, I have started, now I am actually producing this pen, right. When I went to market for procuring plastic granules, I found that the price has increased, right. This price can increase because of several reasons, right. There may be demand supply gap, some political reasons, economic reasons, etc., etc., but somehow it became higher, it becomes 60 rupees, right. So, my actual price is different from standard price, now it is 60. My standard price was 50 rupees per 100 gram, actual price is 60 rupees per 100 gram, fine, okay. Now, the actual quantity, the standard quantity, I assumed that it will require 50 gram of polythene granule, right. But now it is, when I manufactured it, I found that it is 70 gram it is taking for manufacturing one this unit. So, my actual quantity is 70 gram, right. So, my actual cost is how much? 70 gram into my actual price, that is 60 rupees, right. So, my actual AQ into AP, that is the actual cost, is different from my standard material cost. The actual material cost is different from my standard material cost. So, this difference, that is standard quantity into standard price, that is my standard material cost, minus actual quantity into actual price, that is my actual price. This difference is my material cost variance. So, this cost variance may be favorable. If my actual cost is lower than the standard cost, I will say material cost variance is favorable. Otherwise, if my actual cost is more than the standard cost, I will say my material cost variance is unfavorable, right. So, a positive result implies favorable variance and a negative result implies unfavorable variance or adverse variance, okay. Now, this material cost variance, it can happen because of a couple of reasons. One of the reason is that the price is different. As I said in my example, I assume that it will be 50 rupees, right. now I'm in market, I'm getting it at 60 rupees, right? So there is a difference. So because of this price difference, right, that is difference between the standard price and the actual price, I am getting the difference which is called material price variance. So material price variance may arise due to number of reasons like fluctuations in market prices, error in buying due to wrong purchasing policy, etc. This can be calculated by using, so how I can calculate SP, standard price, minus AP, actual price, into actual quantity, right? So it will give me the material price variance. A positive result implies a favorable variance. As I said, if my actual price is lower than the standard price, it is favorable. I am saving money, so it is favorable. Otherwise, it is unfavorable. A positive result implies favorable variance and a negative result implies unfavorable variance, or it is unfavorable variance is also called adverse variance. Material usage variance. Material usage variance is the difference between the actual quantities of raw materials used in production and the standard quantities that should have been used to produce the product. MUV may arise due to number of reasons like pilferage of materials, wastage, substandard, defective materials, etc. Now, one of the reasons why the material cost variance may adverse, for example, one reason is the price is more. The other reason is there may be more wastage, right? There may be more rejection. That could also be a reason, right? So, this usage variance is standard quantity minus actual quantity into standard price, right? So, that is my material usage variance. Okay, fine. Okay. So, now sometimes material is the product uses the mixture of different raw materials, right? So, this material mix variance is calculated when a product uses mixture of different raw materials. MMV is that portion of the material's quantity variance which is due to the difference between standard and actual composition of a mixture. So, the formula is what? Formula is standard cost of actual quantity of standard mixture minus standard cost of actual quantity of the actual mixture, or I can say like this, revised standard quantity minus actual quantity into SP. So, here is one problem. There is a furniture company which uses Sunmica tops for tables. It provides the following data: standard quantity for Sunmica per table 4 square feet, standard price for square feet of Sunmica rupees 5, actual production of tables 1000, Sunmica actually used 4300 square feet, actual purchase price per square feet 5 rupees 50 paisa. So, now we need to calculate the material variances. Okay. So, this material variances, the first one I need to calculate standard price into standard quantity. So, standard price is 5, standard quantity is 4000, so 20,000. Standard price into actual quantity 5 into 4300, 21,500. Actual price into actual quantity 5.5 into 4,300, 23,650, 23,650. So, material cost variance we can calculate, right? So, formula for material cost variance, we can see what is the formula for material cost variance. It is standard quantity into standard price and minus actual quantity into actual price. So, here we can use the material cost variance if we calculate standard quantity into standard price, actual quantity into actual price. So, 20,000 is my, here you see I can do it like this. So, it is 20,000 is standard price into standard quantity, and my actual cost is actual price into actual quantity is 23,650. So, you see this one, this actual cost is greater than the standard cost. So, my this variance, this material cost variance here, it is adverse. So adverse is denoted by this negative sign, and the difference is how much? 3650. So my material cost variance is 3650. I can say it is adverse, right? Now this material cost variance, it can arise because of two reasons, as we discussed earlier. There may be two reasons. One is the difference in price, right? And second is difference in usage. We can do it in another way. See, standard price into actual quantity, it is 21500, and standard price into standard quantity, it is, so I can write like this. So it is material usage, so we can see like this. So material price variance is yeah, so standard price minus actual price into actual quantity. So this is equal to 4300 into 0.5. So it is 2150. And this is, you see, the actual price is higher than standard price, so it is adverse, right? So this is minus 2150 adverse, right? And material usage variance, it happens because of difference in usage, right? It happens because of difference in usage. What is the formula? Formula is this: SQ minus AQ into SP. So SQ minus SQ, standard quantity 4000 minus actual quantity into 5. So it is 1500, and it is minus negative because actual usage is more than the standard usage. So this is 1500 adverse. This is also adverse, right? This is the material usage variance. Now you see, one thing you may observe here, that this MCV, material cost variance, is equal to material usage variance plus material price variance. So you can do a check whether your calculations are going correctly, right or wrong. So here MCV is how much? MCV is, we calculated, minus 3650 is equal to minus 1500 plus minus 2150. So you see, the left hand side and right hand side, they are being equal, right? So that means this calculation is correct. Okay. So I repeat the whole thing again. So we'll discuss a practical problem now on calculation of material cost variance. So here you see the problem is given. A furniture company uses Sunmica tops for tables. It provides the following data: standard quantity for Sunmica per table 4 square feet, standard price per square feet of Sunmica 5, actual production of tables 1000, Sunmica actually used 4300 square feet, actual purchase price per square feet 5.50. Now you need to calculate the material variances. For material variances, we have calculated like this: standard price into standard quantity is 5 is the standard price, and standard quantity is 4000, so it is 20,000. Standard price into actual quantity, so it is 21,500. Actual price, which is higher than the standard price, that is 5.5 into 4300, that is 23,650. Now material cost variance we can calculate. If you go back to the formula, what is the formula? Material cost variance, standard quantity into standard price minus actual quantity into actual price. So standard quantity into standard price is this. So it is 20,000. So it is 20,000 minus actual quantity into actual price, which is this, that is 23,650. Now you see this one is bigger, right? So it is, this actual cost is bigger, right? This actual cost, this is bigger than, this actual cost is bigger than the standard cost. So this variance is minus. This minus signifies that this value, it is an adverse variance. Fine. So the material cost variance in this case is 3650 adverse. Okay. Now this material cost variance, this can happen, this variance can happen because of two reasons as we discussed. The first reason is that there may be variation in usage, right? I anticipated some usage, but actual usage is different from standard usage. So because of that, it is happening. Here also you see the standard usage is assumed is 4 per square feet, right? So for actual production of table, it should be 4,000, 4 into 1000, that is 4,000, but actual usage is more, 4300. That means there is some difference between the usage here, right? So for usage variance, what is the formula? The formula is standard quantity minus actual quantity into standard price. So I can write like this: standard quantity minus actual quantity into standard price, right? And if you calculate this, it comes 1500. It comes 1500, and here the actual usage is more, so it is adverse. Again, minus 15,000, minus means adverse. So this is also adverse variance, right? So there is another reason, there could be another reason for this variance, which is the variance in price, right? So if I go back to the question, the standard price is 5 per square feet, but actual price I paid more, that is 5.50, right? So what is the formula for price variance? The price variance is standard price minus actual price into actual quantity. So standard price minus actual price, standard price minus actual price into actual quantity, right? Standard price minus actual price into actual quantity here. So I can put the formula like this. So standard price minus actual price into actual quantity. So if I solve this, it is coming, again you see, it is coming 2150. It is favorable or adverse? It is adverse. Why? Because actual price is more than the standard price by 50%. So it is minus, and again this is actually an adverse variance. Now one check that whether I am going it correctly or not, whether my calculations are correct or not. One check is what? I can do a cross check. I can do like this: material cost variance is equal to material usage variance plus material price variance. So what is my material cost variance? 3650 minus is equal to, what is my material usage variance? Minus 1500 plus minus 2150. Fine. So now if you add these two, you will get 3650 minus, right? This total is 3650 minus, and this side is also minus 3650. So that means our calculations are correct. Fine. So this is an example of how the material cost variance can be calculated. Okay. Now let's look at another example where the material cost the quantity of material purchased is given as 3000 units. Value of material purchased is rupees 9,000. Standard quantity of raw material required per unit is 25 units, and opening stock is 0, and closing stock of material is 500 units, and finished production is 80 units. So, I can calculate like this: standard price into standard quantity is 2 into 2000, that is 4000, and standard price into actual quantity is 5000, and actual price into actual quantity is 7500. So, I can now calculate it like this: material cost variance, as we know, it is the standard price into standard quantity minus actual price into actual quantity. So, it is 4000 minus 7500. So, it is, of course, it is adverse, right. So, the difference between the two is 3500 adverse, right. And we can divide it into two parts: material usage variance and material price variance. So, material usage variance is the because it happens because of difference in usage, right. So, this is, we can see here, 4000 minus 5000. So, it is 1000, again it is adverse, right. And material price variance, it happens because of difference in price, right. So, it is standard price into standard quantity, right. So, and so I can see here standard price into actual quantity and minus actual price into actual quantity. So, I can see here it is 5000 minus 7500, which is again 2500 adverse, right. So, if I add these two, you see it is 3500 minus and 3500 here it is. So, if I adding these two, I am getting this number. This is one you can try yourself, this problem. So, this is an exercise. So, here you see the standard output of the production house has been set at 1000 pieces per month. However, actually 1020 units were produced. Following is the data for actual and standard production. So, usage is, standard usage is 1.5 square feet per pad, actual is 1.3 square feet per pad, and price is 0.15 per square feet, and this is 0.18 per square feet. So, you need to calculate the material variances. So, standard price into standard quantity, 0.15 into 1530, that is 229.5. Standard price into actual quantity, 0.15 into 1326, that is 198.9. Actual price into actual quantity, 0.18 into 1326, so 238.68. So, material cost variance is what is the material cost variance? Material cost variance is standard price into standard quantity minus actual price into actual quantity. So, standard price is 229.5 from here, and minus actual price into actual quantity is actual price is 238.68 from here. So, if I multiply, it is 9.18. It is favorable or adverse? Of course, it is adverse because this is bigger. So, this is an adverse variance, right. Now, we can take the usage variance. Usage variance depends on the use of quantity, right. So, I can calculate the use of quantity, that is standard price into standard quantity, that is 229.5 minus standard price into actual quantity, that is 198.9. Now, this is favorable or adverse? This is of course favorable because this one is smaller. So, it is 30.6, the difference, this is a favorable variance, right. And last one is the material price variance, which happens because of difference in standard price and actual price. This we can calculate from here, 198.9 minus 238.68. So, if I calculate this, this is coming 39.8. This is again, it is adverse, because the actual cost is higher, right? Again, this is adverse. Now, how I will check that whether it is correct or not? If I add the material usage variance and material price variance, it should be equal to the material cost variance. So, if I add, so on the left hand side, if I write minus 9.18, it should be equal to 30.6 plus minus 39.8, right, minus 39.8. So, you see the left hand side and the right hand side, it is matching. So, it is working.